Guys, so the first pair we're gonna be starting with now is the USD CHF. We did actually come to that point of that period I actually spoke to you guys about. Although trades were pretty much closed out or break even somewhere around here, like so. But we did actually get that supply level that I actually spoke to you guys about. And this is where, like I said, I'm not really a big fan of the lower time frame trading, all sorts of things, because you see what happened. The levels are not really as solid as you think. All right, I rather stick to the high time frame levels on the daily time frame as much. You get me? So for those of you guys that had an entry somewhere around here, like so, which was this level that actually acted as a supply level here. You see what the market did? Actually moved. I think like it moved in your favor, and then next thing came out to blow you through the roof. All right. So if you took a loss on that, my sincere apologies, because that's what happens in the market. You get me? So you really don't want to be found executing trades inside of here. Okay, you get me? It's always best you put it at levels. So this, as you can see, is a minor level. You get me? So this is a minor level, as you can see, like so. So it's always best you use your minor levels, whilst the market moves towards your key levels. Those minor levels help to guide your trades. Okay, so that's exactly what happens in the market. So as things stand here, for USD CHF, yes, we did actually blow through above the level, and now the market seems to be trading back inside of the level. So you really do not want to be caught up in this crap. So what I would actually advise you to do is allow, because whenever I'm faced with a situation like this, I tend to just let the market do whatever thing it wants to do. You get me? Like I step away from this pair and then allow the market do whatever thing it feels it needs to do. Because at the end of the day, you really don't want to be chasing the market. You feel me? You just want to stay and allow the market come to you. When the market comes to your POI or whatever thing your entry level, that's when you now go ahead and then strike. That's when you execute. You don't go chasing after the market. It doesn't always work out well for people. You get me? So the market has to come to you, and then you trade it. Now, two things are actually happening here. We do have, of course, we have supply levels. Now, this, again, a lesson for you guys. We can have as many supply levels on the chart depending on the time frame and depending on what you're looking out for. You get me? So this is also a supply level here. So the market actually. So for those of you guys who actually went long on the US CHF, because I know that there are lots of you guys that traded fundamentals. If you went long here, this would have been your take profit point. You get me? But as it stands now, I'm not really interested in shorting USD CHF or buying USD CHF. Rather, I'm just gonna box this guy up and allow the USD CHF do whatever thing that he wants to do. Right now, I'm so not interested in it because this pair is actually moving crazy. It's starting to piss me off, and it doesn't really have any clear direction. And you guys know that when it comes to trading, you want the clearest direction possible. And in this case, this guy is doing the exact opposite. He's not giving us anything to work with. So in my own humble opinion, I would actually advise you guys to just skip USD CHF. I just did a review because I actually had my earlier entries in here, then stops were above structure, and then I actually made money from this trade. Okay, now the market came and then took us up for break even, which is very normal. But now in the case that you're looking to enter the trade again, I would advise you to just let it go. Okay, allow USCHF pass on, let it go. You don't have to stress about it. You get me? So that's just what happened to the trade that we took last time. Now does this change the trend? Of course, it doesn't change the trend. The market is just like I said, indecisive. Okay, this for this pair is quite indecisive. There is no clear way to stay whether this guy is going up or is coming down. We just actually stuck in the range now, starting to move sideways. And you guys know that the trend is your friend. You really want to see the market move and give you a series of high highs and high lows, all lower lows and lower highs. You really don't want to see any sideways movements here. This is the kind of setup that blows accounts. You get me? So allow this guy go, skip it. All right. So let's just talk about other quality pairs. Okay, so now let's talk about USD card. Now USD card seems to be the guy who is actually starting to move well. So let's see the weekly time frame. Let's see how things look on the weekly time frame. You see why I'm not really concerned about going short on USD CHF, because I mean why would I go long on USD card and then go short on USD CHF? It doesn't make any sense. You get me? So this is exactly what's happening. Okay, so what happened was that we hit a base here. This was where the market actually created a very solid demand level and then rallied out of. So this is the reason as to why the market came on there and then halted and then started to reverse to the upside. This is very normal. This is technically normal as well. So this is the weekly time frame as things stand here. We're actually sat at a very solid level, which is right around that 1.34671, like so. And now looking at things from a grand standpoint, you can actually see on the daily time frame that provided that all things remain equal, this pair is starting to shift to the bullish side of things. Although we have a very solid supply level somewhere around here to look out for, but scaling down to the daily time frame is where you actually see the clearest double or triple bottom that happened, that actually sends USD can move in the opposite direction. Now in this case, this is exactly what it is here. So you can see that this was that range play, and you guys know that whenever the market fails to give a higher high or a higher low, what I always advise you guys to do is go ahead and box that guy nicely. Okay, box the market nicely. Then whatever direction the market breaks out into is where you really want to trade into. In this case, now it broke out to the upside, and you can see that this is just a linear move, pull back for a possible continuation to the upside. So going into next week here, what am I actually looking at for is very simple. So I need the market to come into 1.37309. All right, give me a very beautiful bounce method, maybe on the 4 hour time frame or thereabout. Give me a very decent, bounce method. Or if I do see a wave pattern, but in this case, it doesn't look like we're going to be getting any wave pattern because market just fell right out of the sky. So now in this case here, what we use is a strategy called the bounce method, which is something I teach in the mentorship program. We need to see market give us a bounce method, a bounce off of the 1.37309 4 hour engulfing candle, bounce off of there, and then we're actually good to go. So buy this guy. First take profit will always be right around the recent high. Then subsequently you should see this guy blow through all the way to 1.39915, all things being equal. Next up will be the dollar yen gave us a very beautiful entry one time. I actually did not send it straight out to you guys, but I took this trade actually. All right, so I took it and then I think I got out somewhere around here like so. So what's happening in the market is very simple. Now you guys know, always remember that we have three kinds of pullbacks here. Now, but when it comes to JPY, we're kind of like stuck in between these two because now the market just came into 151.176 and then gave us this daily engulfing candlestick. Notwithstanding, we do have these this demand level here, and I always say to you guys here, when you're stuck in a scenario like this, what you need to do is go one time frame higher. You feel me? Go one time frame higher and see how things are from a grand standpoint. So going one time frame higher, you can see that this is giving us a very solid bearish signal, but notwithstanding, yeah, this is how things look. Remember that we are kind of like moving sideways now, so there is no market, there is no new low or new high on the weekly time frame. So we're pretty much stuck in a range, okay? And this is one of the things I like to avoid is range trading. But now in the event that you ask me what I favor, like what move I favor, I actually favor USD to the upside. In the next couple of weeks, I actually favor this guy going back towards the 1.176 region, somewhere around there like so. And once you clear that space, we could actually see this guy go all the way back to 158.499. Now in the event that this does not happen here, you could see that the worst case scenario is that we actually bounce back into the range, and you guys do not really want that. You get me? So that's just that for the X1 for USJPY. So that's just that for USJPY in a nutshell. So what we need to see moving into next week is very simple. Allow the market come in and then form its base. Let it find its bottom. Don't always try to force the market to accept your own bottom. Allow the market get to a bottom where it balances out and then now starts to reverse to the upside. That's exactly what you need to do in the market. You get me? So in this case here, we have the first touch. Rather, this is the first pullback, second pullback. So this is more or less the top pullback, and the top pullback is always a lot deeper than the rest of the first two pullbacks. So once you see that clear, once you get that clear pullback and then you now see a decent bounce there, what you need to do is lock in for some entries, provided that the market remains above 146. If it does remain around this 146, this is good for buys. Definitely good for buy. All right. So let's proceed now to the Aussie dollar. So I do have a very beautiful setup, looking nice and clean on the Aussie. Let me just get rid of all of these things. Okay, so now AUD in a nutshell has some room to the downside, okay, because things are starting to shift now. I was actually expecting the Feds to cut rates, but they didn't cut rates, and this is why again you cannot analyze fundamentals. You get me? So now remember that we actually had an impulsive run. Okay, from here was pretty much linear. Okay, until we got to this point and then started to reverse. So now technically speaking, you guys already know that the overall trend for this guy is still bearish. Okay, judging from the weekly and then the monthly time frame. So as things stand here, this was a correction of this entire impulsive drop. So I will not be surprised to see the Aussie dollar start to collapse nicely, going into next week, because this is looking like a real huge Fibonacci play. Like, so if we do closely, so the market is currently start at the 0.618 and then 0.5. So what we need to get on to do is go on the daily time frame. Now, for those of you guys that who are actually comfortable trading this range, because this is a range play, to be honest. So what I can identify is a very simple. So this is a chart pattern here, and I always say to you guys that the market tends to move back and correct to at least half of the length of the entire length of the chart pattern, which always is a range. In this case here, this is a triple top here, so the market is technically going to come back into 0.65144. So once you see a decent bounce off of there, guys, I'm shorting this guy back all the way down to probably, let me look left. So all things being equal, we should see Aussie roll all the way back to 0.63491 in the event that this supply level somewhere around here there actually holds, because this is also a Fibonacci play. You get me? Let me show you guys how things look on the 4-hour time frame. So when you find the opportunity to execute the trade, it's a very simple thing, very very easy. You have a supply level here, allow the market pull back into that region, then short the guy all the way back down. So my targets for Aussie dollar is 0.63546. That's going into the next week. All right, so all things being equal, we should see this guy, provided that this supply level holds here, we would definitely see the Aussie melt all the way back down. Now for the euro dollar, which happens to be a very a pretty much faster pair compared to the rest of the pairs, so we did actually give a double top here. So again, instead of the market to continue high, actually came on here and then gave us head, shoulder, shoulder, then reversed, which is my minor for our time from head, shoulder. So this is what happened. Neckline has been broken. Now you guys know that once you break a neckline here, the market has to move to the tune of the total amount of pips accumulated in that range. So in that case here, measuring from the very tip here all the way to this point, once you measure the length from here to here, okay, once you clear out, that means Euro USD has some 244 pips to give us approximately. You get me? And that puts us right at the 1.1 3343 region, around the like. So that's exactly what we're actually working with, going into next week. All right, so allow the market give an entry confirmation, a 4-hour bounce in this case, because you can't really use a counter trend because you didn't get the opportunity to flag, but allow the market pull back and flag a bit, then you can now enter. Or if a type who likes to be a bit aggressive, you can go with the 4-hour bounce. Okay, so first step, take profit will be 1.13914. Then subsequently, this guy melt all the way to 1.13338. All right, so the next one now will be the pound sterling. So the pound sterling also has a similar structure to that of the euro dollar. So as you can see, like, so the market has already gone ahead to give us a very beautiful chart pattern play on the daily time frame. This is head, shoulder, shoulder. Neckline's been broken. Now you guys always know what happens once you clear neckline. And now the reason as to why the market melted from this point here, I tell you what happens. So go on the weekly time frame. Okay, like I said, if you guys don't understand something that the market is doing, just go one time frame higher, even two if possible. You get me? So now in this case here, all right, so now in this case here, if you look closely, we had a supply level here that the market got to and then started to melt. Okay, so this is very very normal. Okay, this is totally normal. Now in this case, the market has given us a confirmation that it wants to go to the downside. So what you simply need to do is go with the flow. All right, do not try to change. You cannot change the trend. All right, so go with the flow, and the next available low for this pound sterling is all the way down at 1.27246. All right, so what you simply need to do is very simple. Once you get to the 4-hour time frame, like so, remember we already have a daily time frame, chart pattern, which has held nicely, and then it has actually gonna have to break the neckline. So looking at this trend line, like so, we are actually out of the bullish trend. As you can see, for the moment we are temporarily out of the bullish trend. So this is how things look. Okay, so moving into the next week, for me to actually execute a trade on this guy here, what I simply need to do is very simple. Come on here like so, look at this base. All right, look at this base like so. That's around the neckline, you get me? So why I need to do is very simple. Allow the market pull back into 1.33770. Once I see a nice pullback there, I'll shut this guy all the way down. My prime target for the GBP moving on would be the recent my first level target will be this guy, and then once we clear that space here, we got space all the way down. Okay, you got space all the way down, and you guys know that one of the things we love most in the market is space. You got space all the way down to 1.27600. All things being equal, provided that the market actually really wants to drop, you will most likely see this guy collapse all the way to 1.27200. All right, so that's that about that. And then last but not the least, the actual guy causing this shenanigans and chaos in the market is the DXY. Okay, so the DXY had a shift in some form of a shift in trend. I won't say shift in structure or so. The XY kind of like had a slight shift, as you can see like so. Now this is this is the reason as to why I'm telling you guys that it's a bit temporary, because I can see that we are still trading below this key level at which is the blue level, and this literally means that anything is possible, you get me? Anything could happen. We could actually see this guy drop all the way down or reverse, and start heading all the way up, you get me? So long story short, for the DXY, I will not be surprised to see the dollar start to shift to the upside a bit, maybe targeting all these highs here, you get me? This high or this other high is very very possible, but provided that we actually remain below this blue bar here, I'm telling you that this whole volatility could be, this whole move could be temporary, you feel me? So because we're actually back in the range, but if you look closely, we started to put a higher low from here. So this is a higher low from this other low. So this is starting to give us some form of hint that that the market wants to actually shift. But provided that the market remains below this blue bar here, there's every tendency that we could actually drop all the way back down, you get me? So this is why the market moved the way it moved, because of the dollar index, you feel me? Okay, so I believe I pretty much covered all the relevant pairs at this moment, guys. If anything comes up, guys, I'll let you guys know. Okay, so that's just that about that.